arrabbiato.
Good morning, Marco. Good morning, Davide, and welcome to
Hello, good
another
morning.
Welcome,
welcome to
Francesco.
another Not Your Money episode. How are you?
All good, all good. Crazy time, crazy market.
Crazy times. Look, I'd like to start this way. On Monday morning this week, Monday, 26th of February, I was exchanging messages with Marco about the markets. Bitcoin was up about 100% in the last 4 months. It's been rallying constantly, bar a few corrections just after the Bitcoin ETF launch. And quite frankly, I was expecting to go in. That shows what a bad investor I am, and that this is not an investment advice program whatsoever. I'm a terrible trader. So I was pondering. I'm a dollar cost averaging advocate. I believe that not timing the market, but just steadily going in at various points is the right way to go. But this time I hesitated. So on Monday, I was sitting on a bit of cash, hoping to go into the market, and I didn't, hoping or expecting that to be a long expected and long overdue correction. 5 days later, Bitcoin expressed its biggest weekly candle, its biggest monthly candle, and it's 10K up in 5 days. What the hell is going on, guys? What is your take? How do you feel today?
On my side, this is today. Now we're today. Like we are starting to experience the true merge of institutional demand with the crypto. Let's say the crypto. I would want to say traditional, but the crypto normal way of behaving, and to a certain extent, it shows that up until now, like the volatility and the cycles and the typical crypto dynamic that we have experienced so far is the result of the market and the people behind this market, the behavior that usually these people express. Now, having opened the door for institutional players to come in, and especially the way we have done it, which is, I think it's an interesting take at this moment. We could discuss about that. We should understand to whom those ETFs are sold to. It's not general public. It's some specific sector, which is ultra high net worth individuals. And these people have a completely different market understanding. Well, not just understanding, it's a completely different goal in mind. It's not making more money, create profit. Is keep the wealth value at the same value, keep the same wealth as the day before and the year before and so on, projected in the future. In 50 years, if they are valued today 1% of the richest, then you need to be in the 1% of the richest. That's it. Whatever is the money, base money that you're evaluated with, that's your value, right? That you should always keep your value. And definitely Bitcoin for them, as we have many times expressed this, but now starts to be, since it's TradFi that is saying this now it's true. It has been marketed as there is only 1.8 million left. This is generational
1.8 million left
wealth.
to be mined, you mean?
Left to be mined, but it's like this is generational wealth. It's a store of value, and this is only 1.8 mineable, or a bit less actually, mineable. The rest you have to buy from people. Now, if you're a super wealthy, you cannot take a risk like that, because the risk is that you will be missing out on one of the most important assets for store of wealth, which is exactly the thing that you want to buy. You want to buy only one type of asset, store of wealth. And if you miss that, it's like fire your wealth manager because it doesn't understand anything. This is
As
something
you
that
say
usually
that,
people don't understand.
I'm sure you must have read overnight, Vanguard's CEO has left. Vanguard CEO has been advocating he will never approve a Bitcoin ETF under his realm. So he's no longer the Vanguard CEO. Obviously, just read between the lines, but I think the message is pretty clear. And your point is well put, Marco. So basically, you're suggesting that the high volatility that's been expressed in Bitcoin's life cycle this far has not been particularly attractive to the traditional financial view of wealth management, wealth preservation over time. But as always, if you zoom out and look at the big picture and look at this as a wealth accumulation trajectory, then there has been simply no bigger opportunity on the market.
Yeah, I mean, imagine you are billionaire or you are a wealth manager, right? And you're talking 20 years. What would be the price of Bitcoin? What would be the price of Bitcoin in 20 years? Well, we don't know. But if you have to it's a binary. It's higher or lower than today. The expectation that it's higher from any analytical point of view are overwhelming compared to expectation that it would be lower. Hence, you're thinking as thought of wealth, you say, well, this in 20 years going up. This is exactly the same topic. This is exactly the same reasoning behind the gold ETF. Super rich want to buy gold ETF because they look, every time there is a financial crisis, every time there is somebody drop a bomb here and there, somebody crazy comes in the world. These are all things I cannot control. What I can control is that I can invest my fortune in places that either stay at the same level, the same growth level as the world economic growth, or if there is a major crisis and everything crash, it goes up. So
well put, Marco.
I don't care what happens in 20 years. I don't care who win the politicians, major, parties, allocations. So I still want to be a rich person in 20 years. So I need to buy asset that makes me still being rich in 20 years. It's not, people think that very rich people needs to make more money. They make more money because they have this exactly because they have this attitude of not buying something that can go to zero, but rather buying stuff that does not fluctuate much in good times, but goes up in bad times.
Sure. Thanks for that, Marco. Great insight on the mindset and approach coming from the institutional lens. David, any reactions from your side? What's your sentiment?
Yes, I was expecting a dump too. I was expecting it to go lower and to have a correction, and it didn't happen. And yes, I absolutely agree with Marco. The idea is that those who hold Bitcoin at the moment are not as price sensitive as they were in the past, and and it's crazy because it's a huge change in what you see in the Bitcoin graph, but it has happened almost overnight and we didn't even notice because I think almost everyone was waiting for what usually happens, and but I think it's a huge change to the possible behavior of in the future of Bitcoin.
It's crazy. I mean, just look at this chart, right? So this shows the green candles, obviously, shows the upward swings, the biggest monthly upward swing Bitcoin has ever had in its 15-year life. And to your point, Marco, I do still sense we're still at the beginning. Yes, we have 11 ETFs. They've been trading just over a month and a half, but we still haven't seen the vast majority of traditional finance. I'm thinking of the big distribution arms like JP Morgan, Citigroup, Morgan Stanley, Wells Fargo, and so on. Once all of those armies of financial advisors, of wealthy and not so wealthy, even retail investors will start going in fully. To a degree, some people already are. Average people on the street can open an app and go directly to an exchange without even having to go through the ETF route, quite frankly. But the door is now wide open for anyone to go in. And I suppose we should expect, I mean, this first wave still continues to be very much institutionally driven, but retail, as always, tends to follow once the market and the media make a lot of noise. And maybe a word of caution: we haven't had a correction this far. We should always expect something to happen in that direction sooner or later. And when the market gets very frothy, very lively, that's when painful outcomes can happen either way. So I think everyone should always tread these markets with a lot of caution.
Yeah.
Maybe Marco, how about we just dive in and just tackle the ETF volume? So what we see here on the chart is the sum of all of the ETF flows. What you can see is just how it's been trending down at the beginning with the grayscale sort of net sell, I suppose. So downward trajectory, and now it's building back up again. With yesterday being the single biggest trading day for ETFs, with over 10 billion flowing into the ETF, as you can see at the bottom of the slide, which compares to the 900 Bitcoins mined per day. So that's the amount of volume traded just through the ETF. That's not even looking at what goes through the traditional crypto exchanges as exists, is already 10 times, if not bigger, than the new supply of mined Bitcoins each day. At this rate, and I'll stop there and love to get your comments, but at this rate, it won't be long before there simply won't be Bitcoin to be traded on the market. And if price is determined at the margin, which means the next Bitcoin, wherever that intersection is between demand and supply, the potential for the market to go absolutely insane is unfolding in front of us.
I think that's exactly the point. I think there is an interesting analysis that can be done here, right? Because we have discussed, and I introduced this during my initial statements. So we have on one side, we have demand, offer and demand. This is economy 101, right? This is how you determine the price intersection between the two. Like I said, there is a total. We know that Bitcoin has 21 million. That's it. And we already like 19 mines. Now, the idea that when people talk Bitcoin and saying that Bitcoin has no value and then that happens if blah blah blah, it's like, yeah, but you don't look at the market. You're thinking 20 million as if you can actually sell. This is the selling pressure, and then they multiply that for the price value of Bitcoin. But that's not the case. It has never been the case, for example, with gold. It has never been the case with any other commodity. If we look at the commodity market, simply because you don't sell, it's impossible for various reasons, but mostly for practical reasons. There is no selling of all of this. There is no 19 million Bitcoin in the market that you can generate as selling pressure. It's not.
Right.
You have to remove, you have to calculate things properly. And the calculation is you remove everything that is locked. Technically, you have to remove as well the ones held by Satoshi Nakamoto because it never be used. There are a certain amount. You have to remove the ones that are in collateral at many financial institutions and in DeFi markets. You have to remove the ones that are used currently in locked financial products. So at the end, you realize that there is a certain, and then you have the circulation supply. So people who actually selling because they're selling. Right? because they find the price attractive. But what you have basically from the supply side is you cannot account for the full amount of Bitcoin miners but producing Bitcoin. But let's say you account for this. Let's be very conservative. Every Bitcoin that is mined is put in the market. Again, it's not the case, but just imagine. Then you add the circulation, means retail people selling. And that's what you get. That's the supply side. But we have to look at this from the buyer side. The buyer side should, especially institutional in this case, and that's why I was mentioning the wealth manager. If you look at institutional, ultra high network people looking at Bitcoin with all the metrics that we have and the philosophy that we have described before of a store of wealth, then you realize that basically it's 80% of Bitcoin is held by retail people. That means that you cannot buy unless they sell. You don't find any other solution there. It's not, oh, it's held by JP Morgan. I have a great relationship with JP Morgan. I go and I buy it directly from them. That doesn't exist. So, yes, we call it FOMO, but it's not FOMO. It is, to a certain extent, it's the reality. And the reality is you want
scarcity.
to have...
The reality is scarcity, Michael.
Yeah, but you want to have this. And the only way to get this is that if at this point, with this influx, and the numbers are here, 10,000 against 900. Right? So if you want to get this, you have to incentivize people to sell it. There is no other way. And people means normal people. And you are happy. I mean, if I'm looking this from, if I would be like a BlackRock ultra high network wealth manager, I would say to my accounts, you should be happy that it's still 60,000 because that's cheap price, because this is price that now it's attractive for retail investors. But once we come in and we redistribute this 80-20, 80% retail, 20% institution, and then it's going to be 40-20, 20% institution, 40 retail, 40 high net worth individual, 40 wealth management. The price is 500,000, 400,000. That's the price you're going to pay to stay rich, to have a store of wealth in your... Or you go buy whatever has already been, what already had that curve. You buy gold, ETF 300 when it came out. Now it's 2,000. You go buy Coca-Cola. Yeah, good luck. I mean, it's a company that is a store of wealth. Coca-Cola. There is a war. They sell 1 million Coca-Colas or 1 billion, whatever. It doesn't matter. They sell the same amount of Cocas or Coca-Colas every day. War, no war, good economy, bad economy. That's why you buy Coca-Cola. You don't buy Coca-Cola because it's a great company of values. Forget it. You buy it only because they sell exactly the same number every single year independently. Those are store of wealth companies. And if you are a wealth manager, you go and buy Coca-Cola. You don't care if it goes up 2%, it goes down 5%. Not a problem. You know that whatever happens, in a long-term scenario, this company value goes higher because they keep selling the same amount of product. And there are many other companies like that. But that's to say that Bitcoin is joining this group of asset where you are store of value, store of wealth. And if you are a store of wealth, Bitcoin compared to the other store of wealth asset, if you compare all of them, is cheap. That's the only narrative.
Yeah,
that's the only narrative. Everything else doesn't matter.
I think that scarcity point, I realize even talking to friends, family, community about this, still fail to really understand what we mean by scarcity. This isn't just a rare asset like a jet, a yacht, a boat. That maybe sort of a fancy asset to own. There are a few of them. That's why they're worth a lot of money, and their price, may stay on the very high side. This may look like a very expensive asset, but it's actually so fractionable. Anyone can participate, no matter whether you buy 10 Bitcoin or a millionth of a Bitcoin. You can still participate in this economy, which you can't do with airplanes, boats, and so forth. And the difference, as you say and confirm, is you could keep creating new boats and planes. You can just manufacture new ones, so that the supply can continue increasing. You cannot play with a supply of Bitcoin. That's it. So we're actually, the way I was framing it this mind, we're actually almost reaching the point, with the numbers you quoted, Marco, 19 plus million out of the 21 total supply, we're basically at 90%. 1 million's with Satoshi, will never be touched. A bunch have been lost, they'll never be recovered, and all the rest are basically held by a combination of private, retail, and institutional hands, including exchanges. But at the end of the day, we're basically in a barter economy. The price and demand will simply be the value at which I'll be prepared to buy or sell my Bitcoin versus the market. You cannot create anymore. That's it. But I think we've battered this topic to death. There is a great graphic showing where actually Bitcoin is just distributed in a nice infographic. We probably should send that out if anyone not seen that. But interesting, guys. Let's move on. I thought it was interesting, actually, a couple of days ago, that just as the market was pumping crazily, it suddenly, in an instant, that was 2 days ago, lost 4K of its upward spring. I think it almost touched 64,000, if I'm not mistaken, to then set back about 4K in an instant. And why did that happen? Because Coinbase announced it was being challenged by the traffic driven by the demand. So effectively, let's think about what that means. 8 out of 11 ETFs use Coinbase as its basically trading counterparty and custodian. And suddenly, with the market pumping, the level of demand that's coming through these 11 ETFs, or probably rather the 8 ones that are relying on Coinbase and any other market participant using Coinbase, have pushed enough traffic to challenge the exchange and its resilience to keep business running. In traditional risk management terms, I'd refer to this as operational resilience. These are sorts of things you should plan and expect and be able to deal with. But I think this maybe is a slightly negative piece of news. I mean, the market has bounced back since, but shows that perhaps the market is still not fully prepared or maybe diversified enough to be able to deal with flows of this kind. So it's a little warning. It might have been a frightening moment. Some people, I think, opened up their apps and their accounts and saw zero balances. So for a few hours, Coinbase was not able to really function correctly. And of course, these sorts of news bleeds into the market and translate into panic selling, and that thankfully stabilized after a few hours and recovered since. And what we also see here is just a reminder of some of the big players, the bigger players as far as exchanges are concerned, in terms of who they are, how much is traded through them on average. And I'll probably just leave it there in terms of insight. But again, Marco, I'd love to hear your thoughts.
I think it's totally natural. October 2023, we were around not even 40, something like that.
Yeah.
And 3 months prior to that, we were 20. Okay, 25. Now, if a company, and that's Bitcoin, but then you have to think that a company like Coinbase made money out of transaction, and the volumes that we have at that time were a tenth of what we have today. The software and the capability infrastructure required, it's expensive, and it doesn't come cheap. And you have intellectual costs, meaning you have to hire people, you have to onboard them, you have to make them work. Now, if anyone actually have ever worked in IT in his life, he knows that in 6 months you are not hired, and you are able to design and release in production a system that is capable of maintaining probably one of the biggest, largest inflow of money in financial history. So I would say that it's totally normal that this has happened, and that also showcase that whenever politics try to get into the natural development of a company and try to squeeze to push to skew the direction of capitalism, natural capitalism, the effects are never positive. Because if you are a CEO of Coinbase, if you're Brian Armstrong, and you have to, if you find yourself in the summer of 2023, either you take the biggest bet in your life, and okay, you probably already had because he knows some stuff, but you have to hire people that then they will produce, and you have no idea if actually this works out. You have no idea what's the flow. It's too easy today. And now, and everyone was criticizing crypto as a scam. You have Senator Morgan is telling you that you are a drug dealer or something like that. And you have to basically ask, either you can hire people for free, which I don't think is the case. Otherwise, those IT people want a salary. And so now that the price is going up and the influx is massive and so on, now you have the opposite to say, but why you're not capable of managing all of this? And then the same guy will tell you, like, 6 months ago you were bashing me because I even dare to exist, and today you are bashing me because I don't have the most resilient infrastructure ever. It's like, guys, this level of IT infrastructure is not built in a day. You don't do click a button. I know that most of the politicians probably in the US believe that clicking a button it's equal to the whole infrastructure of the internet, and not just in the US, globally around the world. But that's not the case. It takes months, years to build something that resilient, and so we have to expect that this, it has to be refined. This is the game that politician plays on over our heads. Our heads means the global population, whenever try to interfere with the natural evolution of a company in a capitalist world. Instead of allowing that company to naturally evolve, they try to push things left and right, creating a lot of issues. And as an elastic, right? You expand it and then it contract very, very suddenly. But that speed is not the human speed.
But just to be clear, Marco, there's no politics involved in this scenario. I mean, the market corrected due to an infrastructural problem at Coinbase. They had to deal with it. I think your point was that as part of the maturity or maturing of the industry, of the players, of the intermediaries, this is part of the trajectory. We have to go through this process of building, scaling up, and
I'm saying this is the natural consequence. This is the natural consequence of having tried to destroy the crypto industry when we were in a crypto winter market, when things were extremely difficult for company to stay afloat, and so they have to fire a lot of people. They have to. It's natural because that's normal. And then when you suddenly the price started, there is a shift from the regulatory point of view. There is a shift. You do not allow this to grow naturally, organically, but you just push a button to say now it's green light. That doesn't, like, the reality is that IT does not work, does not improve at the speed of light. It takes time to hire people, put them to work, create something that's resilient, and then having that system be battle tested and working for the masses. There is a natural time gap from when you start and when it's done. And since we have been going through, like, last year of a lot of negative also inflow, and this has an impact. Because when banks do not give you loans, if you are Coinbase, when basically if you are Coinbase, people left and right trying to tell you that you're not a good enterprise, and so we are not allowing you to develop too much because we don't want to take risk. And now you have to build, otherwise it doesn't crash.
Let's
Reality
also
versus politics.
let's keep in mind that Coinbase is a regulated U.S. entity. It's on the stock exchange, unlike all others. So of all of them, that's why it's also being chosen ahead of others by the ETFs. But I think for me, the key message is the industry is building. There will be glitches. There may be other sort of hiccups along the way. Spreading your bets, diversifying your exchanges, using cold wallets are ways not to keep all your eggs in one basket. So whether that's Coinbase, Binance, or whichever exchange you go through, we have to navigate this phase of the industry until we really know it's anchored on very profoundly, sound and resilient rails that might still take a while. Moving on, and another graphic I thought was quite telling, and I'd love to get your views on is, we think of Bitcoin as a store of wealth. It's often thought about as digital gold. This is how Bitcoin has performed since the ETFs have gone live. Now it's a short period of time. It's only a month and a half. But I think it's quite staggering as to how the market seems to be rotating out of one store of value into another. Keep in mind that gold, I believe, is about 13 trillion in assets worldwide. Bitcoin's just surpassed 2 trillion. That means Bitcoin is 15% of gold. Bitcoin is 15 years old, and you see how it's trending. Question.
Bitcoin is 1.2.
How long before Bitcoin can antagonize or even surpass wealth accumulation, through itself, through Bitcoin as opposed to gold? It looks to me that that can well happen sooner than we can expect.
Just a couple of things. Bitcoin is 1.2 trillion. 2.4 is the global market cap of crypto.
You're right. Sorry, absolutely. Yeah, sorry.
The
10%.
Gold production is bigger than Bitcoin production. When ETF for gold was launched, you were basically betting on the company as well, and as companies behind the Bitcoin, the gold extraction, Rio Tinto, and the other. Basically, you have to evaluate also what the status of the economy was, the company. Bitcoin is more correlated because it's effectively, to a certain extent, less connected to traditional market, although you have big Bitcoin mining companies, so you can track what they are doing. But I think it's a matter of distribution and supply. Like gold supply and distribution during the ETF age was different because the underlying, which is dollar, was also different. Like we are talking, help me here, Francesco, but I think in 2000 something.
When the gold ETF came about.
Yeah.
Yeah. Possibly. I thought it might have been a bit before that, but I might be wrong.
Yeah. Let's say 2000, just to mark. M2. Look at the chart of M2. M2 is the money supply of from the Fed. So from the Fed official data. You look at M2 in 2000 and look at the M2 right now. It's a parabolic. Okay, so I think if you, instead of
2003, Marco, just
2003. Check. Okay, see, I said 2002. I wasn't that far. If you readjust gold performance against the money supply, I think then you just push the gold performance very close to what Bitcoin is doing to a certain extent. So it's we always have to, and this is for people like in general. there is nothing that is static. You cannot compare when we are looking at price of something, we are comparing price of that versus the price of money. It's not price of money, it doesn't exist. $10,000 are not $10,000 the same value always. It's the number that change in value over the years. Okay, that's important. And this is, I think, is the single most important aspect of finance that people do not understand. That money does not have a constant value over time, and depending on the supply, there's a huge change in the money value. So if we are now 10x compared to where we were in 2003, you just have to multiply by 10 the performance, the curve compared to dollars, the curve of gold. And the story, I think, will become very similar, right? And then at that point, you realize why Bitcoin is going so good. It's because, well, when you have an M2 supply side that is so massive, and you have compare it against a store of wealth type asset, which has a scarcity factor inside of it, then of course, like that compared to something that is instead is constantly expanding, it is increasing drastically in value. But is a market finance 101, I would say, or even economy 101 type of information formula. It's not difficult. Is that we are trying, even in mainstream media, and I do not have anything against them, but we should, I don't see that much disinformation. We still do not promote and educate people about the effect of printing money over the price of everything else. We keep saying, oh, SP500, 5,200, new all-time high. Yeah, guys, that means nothing unless you put this in contrast with the money supply.
Yeah, we have a few episodes on that, Marco, where we've tried explaining and expanding what it all means. So hopefully it will start making sense drop by drop, as it has to all of us as we went through the sort of painful journey of learning what this all means. Anyway, I think it's an interesting trend and one we'll have to keep track of. As I've also seen, but I haven't shared here on the slides, there's graphics around the total value of Bitcoin as a currency if compared to other main global currencies. And now I think it's now in the top tens if you were to compare it to traditional worldwide currencies. I know that it is not technically considered legal tender, but at the end of the day, does it really matter? I suppose if people want to have it and hold it, regardless of what their country is authorized or not, I suppose it's freedom money, as we've also discussed in the past, isn't it? Let's dive into the market. So I think we've touched on some of the numbers, just a few updates. Again, source is CoinMarketCap, so there's not our product, but the market has taken up, as I quoted before, 2 trillion is the total market cap, not the one of Bitcoin. That's almost 40% up on the month. Bitcoin halving is just over 50 days away, so that's one to look for. Bitcoin dominance, 53%, so that's gone up. I was expecting that to go down, actually, after the first rally. After 2023, I was expecting some of the other coins, from Ethereum to all the rest, to start pumping, if you want, and diversifying this concentration. But it does show how a market that is made of a constellation of 10,000 plus tokens still has such a huge dependency on Bitcoin as its anchor. The killer use case of crypto is still by far Bitcoin. I don't think that's questionable. The market says that and speaks very loudly. I'll probably just highlight the fear and greed index in here. It's a measure of exposure of how much FOMO, I guess, there is, how much sentiment there is to buy. But it's also a risk sentiment in my mind that shows that the market may be a little frothy, and if everyone's piling in their money right now and putting more than they can afford to lose right now might not be the right time to do that. So steady investing, dollar cost averaging. Don't time the markets like I was hoping to do on Monday morning. Just close your eyes, believe in the fundamentals, keep learning, and find the right times. If there are any drops, those are good times to buy. Otherwise, it's too difficult to gamble, quite frankly. Even the most active traders, I really struggle to see how can really make and generate consistent positive outcomes in a 24/7 market that never sleeps. It's quite hard to do that. It's hard to do that.
And just to maybe just my interjection here, because I'm for different reasons I've been involved in this advisory point of view for other activities. Never believe with anybody that tells you that he knows how to time the market perfectly. Like sell here, buy there. There's videos on YouTube about this, and just think about it. If there actually somebody who have discovered formula, an algo, a methodology to time the market, why this person need to actually share it and sell it somehow? Because if you know how to do that, with $1,000, you become the richest person in time on planet Earth. So there is no incentive of doing that unless you do not have that formula and you're just trying to create attention.
Thank you, Marco. Great reminder. Again, take it easy. Take it easy. I know it's small print, but it's also interesting to see how the rest of the market, and we can't squeeze all of the 10,000 tokens. These are just the top 10 coins. But yeah, I guess what we can see here is that as Bitcoin falls, the market follows. At least by and large, that seems to be the trend. I suppose we can expect that trend to continue. Again, back to the dominance point. If Bitcoin's up massively, you tend to see that spillover effect from retail traditional investors to the institutional ones that also want to start spreading their own bets and looking into what else there is else than Bitcoin. So they'll look at Ethereum, they'll start looking at Solana, stable coins to help people go in and out. What still strikes me, quite frankly, I'll be honest, I don't know that much about them, but just I perceive them as sentiment coins, as meme coins. Dogecoin and Shiba Inu are still in the top 20. That blows my mind in terms of what they're really there for, but maybe that shows how much I still fail to understand what a meme coin's value is, as voted by the investments of people who believe in its value, whatever that might mean. Nevertheless, there you go. That's the picture of what is out there as the top 10 coins right now. Marco, you're more active on the market. Any specific insights you'd like to share or point out? Big movers up or down?
I mean, the discussion takes more time, so I'm just gonna say a couple of things very, very quickly. So yes, Bitcoin is the main leader. Most of the time when you have a sprint of Bitcoin, you can expect an altcoin catching up the next day. Not always, not always, but very often. There is an accruing value effect. There are some specific fundamentals of this. Some projects have Bitcoin, for example, as backing up. That's also why the project goes up. That could be one. But the market generally right now, it doesn't make sense to me to analyze it in detail for every single one. Like if there is a coin makes 10%, we need to normalize it against Bitcoin and the global trend. And then you see like if it is just beta movement or there is something built under the hood of that single project. I think we can reevaluate this in once normalizing against global growth, so the beta of the market, and then more data points. One day doesn't change anything, even 1 week doesn't change anything. we need to see this in a more long-term scenario to actually evaluate the fair value of fair value price of a project, for example. So I would, as we said about Bitcoin, don't get too much excited when it goes up and down. Like the same story, square for every other coin. Just do your fundamental analysis, trying to understand if there is a growth in revenue, if there is an interesting technology innovation going on, if there is a growth in community addresses connected. I mean, we can have basically one session about how to do due diligence on a project.
Definitely must do that. David is about to release a piece on pricing and market cap in particular, but as you say, there's much more than market cap to read through the fundamentals of any coin. So don't just look at the prices, don't just look at the market cap, study each one as you would with anything. If you were looking to buy a house or an expensive car or whatever, you'd want to shop around and understand what you're really buying.
Markets are markets everywhere, and some of the fundamentals, like methodology, not fundamental, the fundamental methodology are principles that are applied anytime there is a market. So don't get distracted. Use the same macro principle and fundamentals to do that, and you see that things works out this way much better than just following hype.
Great. Davide, anything from you you'd like to add here?
I absolutely agree with Marco. I see that when the FOMO kicks in, everything is pumping. So it's really difficult to understand exactly if there's a reason or not behind the pump of a coin. I was thinking about the role of Binance as I saw this chart, and the other one. I remember some months ago we read the report that was saying that probably Binance won't be the number one exchange in the future, and but I see it keeping it up with the market, and I'm a bit surprised because I was expecting, for example, as CZ resigned, some hit to be taken by Binance, but I see it performing really well.
Yeah, that was quite interesting. I myself thought there would have been. I mean, they are under a lot of pressure. Binance. They have to get the whole shop in order from the U.S. Regulators, and that will take a while and a lot of money. But they are building out and retaining their dominance. I think the market might need a little more diversification. We've seen the example on Coinbase. Guys, let's draw to a close. We've
can I add the?
Oh, of course.
Binance success, BNB performance is due to one single factor: the launchpad.
No, I agree. It is.
That's
it is also as I was speaking to some friends these days.
Explain the launchpad in 20 seconds, just before we wrap up.
If you hold BNB or a few other assets, you can just deposit on Binance and then participate in the early stage launch of early stage project. So you receive, it's called airdrops token, and this will allow you to have tokens on a new project that could potentially goes very high or go to zero, but that's like the natural development of a very early stage project.
Thank you. Sorry, David, I think I interrupted you. Anything you wanted to finish off?
No, I agree with Marco, but I think it's launch, as I see it, as my point of view, launchpads are usually a sign of a bull run coming. Every time I see a lot of launchpad popping up on Binance, it's always a good sign. And I agree with you, Marco. I saw on the latest launchpad that was I think Portal, there were more than 16 million BNB staked. So it's yes, that's probably the reason also.
On that note, as I'm the risk manager in town, it's up to me to say that and remind that crypto is risky and launchpads are risky squared. You're effectively investing in newer startups in this space. So that's not to say that there's not new value coming, but as always, we've just said it enough. Just study, learn, understand what you're investing in, and Be prepared to lose what you invest. Guys, it's been great. It's been a great market. Hopefully more of this to come, and we'll do it again whenever we'll do it again. Happy weekend, guys. Thanks for the
Thank you very
chat.
much. Thanks
Happy
for
weekend.
listening.
Bye, guys.
Bye bye.